Hey, good morning, everyone. Morning. Happy Thursday. It is September 28th. Hope everyone is doing well on the session. And what a beautiful overnight range that we've had, right? 20-point moves overnight, even here on the pre-market. Some really good opportunity that we have been looking to take advantage of. I haven't really slept a crazy amount because we got that opportunity, right? The levels when they trade, very, very juicy. So it's really opportunistic to find those opportunities right now. Opportunities. Anyways, right now I'm looking at this thing and we're trading off the lows, the oh 04, the oh 05. We're up like 6, 7, 8 handles, right? It's just looking really, really nice right now. So it's a crazy, crazy time to step on it, right? Last few days have been really great. So I'm looking for this to continue. We'll talk about that trade plan today that worked out really, really well yesterday, and there's going to be more to it. So, first and foremost, let's talk about the supply, right? So we got the latest data out of Cushing, Oklahoma. The nation's major oil storage hub has commodity traders on edge again with steep drops in inventory, compounding worries about tight global supply. Last night, WTI crude even touched $95 a barrel at 9 p.m. Eastern time, right? I haven't even checked this. Um, sorry, the crude prices, but that's a lot, right? Since the beginning of the summer, the price of crude has soared 40% over the last 3 months, right? West Texas Intermediate jumping another 3.6% on Wednesday, marking its biggest gain since early May. And if we take a look at this in relation to inflation, further down draws at Cushing could spell trouble for an already tight oil market due to deepening supply cuts from Saudi Arabia and Russia. And inventory levels in Cushing have been cut in half since June and now stand at just below 23 million barrels, or a level that's close to the operational minimum. So if tank storage falls below 20 million barrels, the oil can become sludgy and difficult to remove. So potentially adding to some upward pressure on oil prices, oil price and renewing fears of inflation. So the U.S. has, in essence, bailed out the rest of the world from oil supply shortages, but that it is about to come to an end. This is what investment group leader HFI Research said, and the U.S. crude storage will not build during refinery maintenance season in October, and one of the bear factors was demand. But demand is holding up well. Oil stocks have also reflected that similar sentiment since the summer. We've seen big gains in Chevron, Conoco. We've seen EOG Resources, ExxonMobil, Hess Corporation, Occidental, just pretty much all of them realistically. Bond yields also climbing with oil prices, the 10-year topping 4.6% on Wednesday. And if things keep going like this, right, it can rekindle some kind of fears that lead to the third consecutive year of losses for the bond market, right? Bond market in shambles right now. There is probably a long bond trade, but not until we see those recessionary worries start to really overlap here. So a development that has happened that last happened in early 1970s, and that will have broad implications for other asset classes and currencies, with higher bond yields making the greenback more attractive. And the next catalyst for investors that are eyeing is key inflation data. Right, tomorrow I think we have the PCE reading, the Federal Reserve's #1 reading. Hold on here, let me just see if we can trimmy some of this. Oh, geez. Love it when the range plays out. This is some great stuff here. 1, 2, 3, 4, and 5. All right. So let's talk about some other news here, right? Talking about soft landings. Bank of America BAC CEO said that the bank strategists still expect to see a U.S. economic soft landing instead of a recession on account to continued strength in consumer spending. He also noted that the Federal Reserve is winning the battle against inflation, quote unquote, right? But flagged the risk of going too far in the policy tightening as far as Basel II endgame proposal. So the CEO also joined his counterparts in saying that they would make U.S. banks less competitive. So we've seen leader Lawrence Fuller also believe Overall, incoming economic data indicates a soft landing in 2024. So there's still the expectation of something like that, right? A softer landing instead of like a full-blown recession. But there's going to be some kind of downside movement expected in the latter half of 2024. A lot of people are also looking at this in terms of the government shutdown that is now priced in around 90% from the last data point that I saw. But realistically, if you take a look at the last few shutdowns, right, the shutdowns don't necessarily affect the stock market extremely negatively, right? If people are thinking this is the catalyst for that recession or a softer landing, whatever the case is, I think that's just not the right thinking necessarily. I think that these government shutdowns have led to, on average, I think like maybe about negative 1% in the market's movement. So this could be a catalyst to see that final flush and that final sell wave before we have a bottoming in the next few weeks and then a rally in the market. That's the way I'm looking at it realistically. So why don't we take a look at what's going on in the futures market today? Great trading in the overnight session. We've been ping-ponging between two key levels, two key order flow levels that we found yesterday posting around realistically. So when I'm looking at this, 43.05 has the bottom end of the range. 43.03 to 05 is an order flow low. And what we have on the top end is the 25 region. So 25-ish. So a 20-point range that's been shaping up. Right, ping-pong between these has a lot of opportunity to sell the tops, buy the lows. And they really need to hold the 03.05 to see if that upside can continue and we can get some kind of dead cat bounce. Otherwise, we're coming down to the 42.93. So, Laurent, 100%. ETH session, insane. So I'll see you guys. We're going to be opening up our live trading room in the futures room. Let's do that there. Let's see what we get in the RTH. Ideally, it's as bountiful as how it was in the ETH. And remember, check us out at community.tradeproacademy.com. We post a bunch of analysis there so you can get a taste of what we do. And I'll see you guys tomorrow to wrap up the week. Happy Friday and enjoy, everyone.